General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, charts, coffee, top down, monthly, February just start. This December's low. Let's put this back on here. All right, December low. Cool mile marker. We'll see. The mile marker for the top will be previous month high. We don't need nothing else. This weekly concoction. We'll put this as our next major swing low. And it's close to the 200. This area here is balanced. I've been calling this the tariff range. This is where we just sit here and wait on Supreme Court tariffs, which is okay. Not interested in none of these levels. I mean, previous month's high and all-time high. We still just playing in this range. Is this interesting now that it came down? Not really. I'm not that interested in it. We do got stuff down here, maybe stuff up there, but how this range is playing, I'm not even interested. I think this is a little bit more important. Mm, let's go here. Yeah, that's pretty much getting all the stuff I really actually want to see. Breakaway gap, slow resistance liquidity runs. I can see the order blocks down here. I don't have to mark that up. Let's go here. We didn't get this low, so that's interesting. Simple. Still tacky over here, but it's a little less tacky. At least previous month's high is the all-time high. And we do have this inefficiency here. What's that, the daily? Yeah. Okay. Mm, yeah, really. This right here, we don't have no body clothes. That catches my eye as well. Yeah, that's all I need for that one. All right, let's see. What's the dates? Week 2, February 8th through 13th. Calendar. Let's do this. Okay, it's a Japanese bank holiday. I think they won that. Japan election. Okay. Yeah, she did win. Okay. Japan election. Market reaction. What are they calling it? The Takiyachi trade. Yeah, it's gonna be a pity. Yeah. So she finna start printing money over there. Yeah. So this is actually pretty big for the market. Um, Let me get a better screenshot. Move this over here. So boom. So here we go. NFP Wednesday and CPI on Friday. So we looking for Wednesday midweek reversal profile. So get the CLT. Here we go. Save. NASDAQ. Okay, looks like they closing shorts. And that longs. This is bullish. Uh, but but they still have more shorts overall and long positions. So to get out the shorts, the closing shorts adding longs. This is bullish, but they still have more shorts overall. Okay, let's do this. And this is the Nasdaq cotton. Yeah. Who's net bullish? Commercial still net bearish. Large specs actively adding bullish exposure. Still structurally short, but they're hedging for higher prices. They're emotionally bullish. Expected price behavior, choppy, failed breakouts, distribution consolidation, and risk of downside shakeout. This is not a clean commercial led bull market. Yeah, commercial sold 40. Yeah, that's still having no sign of panic covering. Shorts reduced modestly but not aggressively. That does make sense. Okay. Commercial short lays seasonal strength. Look for fail highs, time-based exits for long, short setup after exhaustion. This month options expiry could be interesting. Let's look at S&P. Oh, here I had it over here. Man, I went too fast. Here we go. Hmm. Okay. This is bullish. Look at how many buys they added. 34,000. Yeah, it's crazy. Let's go back here. This is S&P 500. Yeah. We already know. Yeah, it is different. Commercials are net long, large specs are net short. Upside rallies driven by large spec short covering. Pullbacks likely viable, and it's not trend ending. Yeah, it is. It's given. It's clean too. It's just that was just a lot of buying on the open interest side. Okay. We're looking at no change from March 18th. Let's grab this. No chance of rate cut. March 18th. Was that 78%? Look at the earnings. Robinhood this week. Semiconductors, Coca-Cola, Lyft. Um, yeah, Yeah, Rivian, DraftKings. This is a nothing week. Big names reporting this week as far as the top 10 NASDAQ companies. What's going on with the sentiment? Still bullish overall. Still bullish overall for sentiment. Let's get 9 weeks of days. It's the 9. If we in such a balanced market, we don't really need a lot of markups. You can just use new week opening gaps because it's enough until you have support and resistance all through the chart. Oh snap! What did I do? Market's been in balance. Put it in for the catalyst of the Japan election. Could give us new all-time highs. Anchor point interaction. It's been an older. No solid order flow or anchor. Price to story alignment. Kind of drama. Midterm seasonality. And Supreme Court. And it's just a bunch of stuff for the story. Set up confidence, we engage it. SPX 500. 9 weeks of days. So TriLink. bullish here. We don't have the AI bubble drama in the spot. Anchor point interaction. Still no solid anchor. And these lows for the 40-day look back, 40-day if the range have no good low or high. Stored price alignment. Waiting on news. Price is at fair value in this large range. And engage. Don't need this. Focus delivery. Place hits. Journaling intent. Draw liquidity. Case study and plain data profiles. Be conservative. Market's been crazy. And fix is high. Wednesday. CNFP on Wednesday. All right. All right. The work is done. Y'all have a good day. Peace.